Good morning, everyone. This is Srikanth Rajan, and welcome back to the Wealth Management Podcast from MP-507, your only place where you need to be there to grow financially because we have all your wealth management options in one platform. Well, for a one-to-one meeting with me, do register at mpiinvest.com, www.mpiinvest.com, and we'll schedule a call one-to-one. Well, talking about the markets yesterday, of course, we could see the Indian stock market actually opening with a major gap up, which was expected after the huge rally in the US, thanks to the Federal Reserve. Well, if you are new to the video today, do check out yesterday's video. That is where you get all the details about it. But then yesterday we've not seen that major positivity in India, except that gap up opening. The markets have been a sideways movement and consolidated to close a expiry day, almost flat. So overall, yes, market has seen a movement upwards, but still the positivity is still not seen. In fact, there is some bad news as well, which we'll discuss as we go forward. Apart from that, if you look at overall markets, the markets have been kind of hovering in the same 22,000 range, and like we've been discussing, until probably the elections are over in India, the markets can remain range bound in a similar area. So of course, 22,200ish is the all-time high, and Indian markets are right now trading close to 22,000. But then, interestingly, Japan is at all-time high in spite of the inflation going up. In fact, I've discussed about it earlier. So Japan is a market where the interest rates have not been increased for last 17 years, and now finally they are starting to increase because the inflation is going up. So that is something which is on the cards for the Japan, but still Japanese markets are hitting an all-time high, and US markets have also hit again an all-time high yesterday after the positivity from Federal Reserve continued yesterday. So now one important thing was yesterday in the US there was a news. The Accenture, which is considered kind of the topmost company in the world for IT services, has kind of given a news that they're reducing the guidance level for the next quarter. So that means the next year they are actually feeling that the revenue may not be seeing a major growth. Now, when Accenture is not going to see a major revenue growth, naturally the most entire IT sector companies will be affected. So that's exactly why we will see some weakness today in Infosys. Majorly, if you look at the American depository receipts in US market, Infosys has seen a 4% fall there. So that can be affected in Indian market. But then, of course, we may not see a 4% cut because already in Indian market, Infosys has seen a decent correction in the prices. So that can be on the cards for now. So focus today would be majorly on the IT sector, on how the IT sector is going to hold on at this point of time. Apart from that, if you look at very important thing, if you remember the podcast that we have done during the January series, there were a lot of big market experts from across the globe coming out and saying that this year three important markets would be on focus. That would be Japan, Vietnam, and India. Now, among that, Japan has been hitting a brand new all-time record highs almost everyday basis, whereas Indian markets is still lagging behind. So one important thing that I can tell you is at this point of time, Indian markets are kind of getting in a sold off zone, and in fact we could expect the markets to actually continue to move up further, probably after the elections. But then, of course, the longer the market is staying in consolidation, there are high chances that the rally can be faster. Now, don't quote me on this, but then, like I always say, these are all our anticipation, and nobody can ever predict the market. But then, as of now, the electoral bonds and the elections in India actually holding back the Indian markets is what I feel. But however, there is still trouble seen in Indian banks because of the credit, deposit rates not going up. So deposit rates, deposit amount not going up much. So that rate of deposit growth is kind of getting reduced in the market, probably because a lot of people are investing into the equity market. So with all those things, banks can see some trouble for some time, but then lending is not stopping. Lending is on a high. So when lending is continuing and deposit rates are going, deposit is growth is coming down, then we could expect the banks not to perform great. So that would be something that could be watched out for some time. But then, of course, NBFCs can be in benefit. So NBFC, for people who don't know, is non-banking financial companies. So these are companies which doesn't have bank but all just lend money. It could be like Muthoot and IIFL and all these people who are into different kind of money lending. So well, these companies could be watched out. We could see Shriram Transport actually doing well. So all these things are such stocks which can actually do well. Well, this is not an investment recommendation. This is just my opinion that I'm sharing. Do your due diligence before investing, or connect with us to help us, get you a right portfolio to invest in, which can be on automated mode without even you looking at it and generate returns. So that's about the market at this point of time. So like I said, as Japan and Vietnam is kind of Vietnam is a very small country to be looking at, so Japan is one thing that we look at. So Japan is of course doing great at this point of time. Indian markets also should see something going up. Apart from that, if you look at one important news is that Indian markets, AMFI has been told to ensure that from April 1st, no more ETFs, exchange traded funds in outside India. All the ETFs that is being investing into outside India ETFs have been told to stop from 1st of April. So that means the fund flow towards outside countries will actually reduce. Well, this can be good for Indian rupee INR value going up. So that could be something on the watch. But however, there are a lot of people who are doing direct US stock investments. I'm not sure how that is also going to get affected. So we'll have to watch how that works. So apart from that, if you look at for today is Friday and we've got a long weekend ahead. So it's Saturday, Sunday and Monday. Monday is a holiday for Holi. So markets would open only on Tuesday, and next week we've got a very short week of just 3 days, Tuesday, Wednesday and Thursday. Just 3 days, and Thursday is the monthly expiry of March. I would say the last expiry of this financial year, and that needs to be looked into how the markets are going to perform during this time. So very important, watch out. Markets can be really volatile, and of course stay safe during this time. So traders, I'm warning you, it's time to be careful. As far as investors concerned, of course, like I told you, since the market is seeing a compression mode where the markets are kind of in this sold territory, there are high chances the markets may go up. So it could be a great time to do a SIP mode of investment, even through a mutual fund or PMS or AAF. But of course, if you need the right choice, connect with us, because we are one of the best wealth management companies in the country. So, well, that's it for now. Wishing you all a great weekend ahead. This is Srikanth Rajan signing off until we catch up with more details on Sunday on the Market Pulse video at sharp 7 p.m. See you then. Bye bye.